Ladies and gentlemen, we're moving towards our second panel discussion, and the topic is payments, the pulse of finance in India. Ladies and gentlemen, the session will be moderated by Mr. Anurag Sinha, co-founder and CEO, OneCard. So let's give a huge round of applause for Mr. Anurag Sinha. Everyone, welcome. I would now like to invite speakers as well. Welcome, sir. Very warm welcome to you, sir. Thank you. I would also like to now invite our elite set of speakers. Please help me in welcoming Mr. Subhrajit Basu, Regional MD, APAC, Business Development, Discover Financial Services. So very warm welcome to you. We have you with us, and please help me in welcoming Mr. Anurag Gupta, Vice President and Head of Global Merchant and Network Services, American Express Banking Corporation, India. So very warm welcome to you. Please help me in welcoming Mr. Pankaj Gadgil, MD and CEO, Aditya Birla Housing Finance Limited, and Head Digital Platforms and Payment Strategy, Aditya Birla Capital. Very warm welcome, sir. And we have Ms. Santosh Dujari, MD and Head India Subcontinent, Treasury and Trade Solutions, Citibank. She will join us shortly. So once again, let's have a huge round of applause for our esteemed panel.
Thank you. Now, I think our topic is super comprehensive, payments and finance. I think the whole, whatever we are doing for 3 days, kind of captured into these two words. We'll try to do a justice to that. One of our co-panelists, Santosh, she's on the way. She'll join us during the session. So, we'll kick off talking about payments first, then we'll move to how payment leads to finance. I think they're all quite interlinked. And India is, of course, right now one of the biggest destination to talk about the digital payment adoption in the recent times, from UPI to QR to tokenization. We're the first country to adopt tokens for card transactions, card not present transactions in India at a mass scale. So, the idea is that so much is happening. What next? Where do you think, what would be the next modes of payments or next use cases, form factor, whatever, how do you want to paint out? And especially, I'll probably go to Anurag first to begin with. And, given that you guys work, you run payments across the globe, is there any other global trend which is happening, which, we're missing in India, which we can, implement?
That's a great question. It's very interesting, right? A few years back, we used to think account-to-account transfer is a distant dream. It's not something which is going to happen. UPI happened here, and now we are in this UPI stage, and we are thinking about what next. Honestly speaking, it's very difficult to say that can there be something beyond, but there would be. Adaptation, innovation would keep on happening, but it will happen across four main things about it. Convenience, ease, speed, and security. Now, basis this, what therefore would be the new form factors, or what would be the new payment methods? I think the UPI piece would evolve into further products, further types, followed by the new generation wants things quick, convenient, right? So it's important that the form factor actually will move to phone-to-phone payments, biometric enabled or authenticated contactless payments, B2B, cross-border. What is very important to understand is that while this journey of evolution would happen, there would be innovation. Now, this innovation would be from a technical standpoint, from an ease of doing business standpoint, aided by a lot of government support. So I think it's a very interesting journey. A lot of cross-border is what we can look at. We can look at a lot of B2B innovation which is happening in the industry. Of course, all of this all of this, as I said, the fundamental thing for all of this would be technology.
Taking on that, and of course, the way payment are being adopted, especially even on the acceptance side, so much work is happening. Like we talk about merchants, which are probably equivalent of few countries' population. That's the scale we are operating, and people are still generating, more acquisition. And of course, payment generates tons of data, and in our scoring language, it has the recency, it has the frequency, it also has the monetary aspect of it, so you can definitely use this data. In fact, the whole currency of the data is so useful to build finance use cases on top of that. So, Pankaj, I want to bring in here that how do you see this, and already industry is using this data for many finance use cases, not from today, from the past, but probably for our audience, you want to give some overview how currently industry players are using payment data to drive credit. We all have heard terms like embedded finance, solving credit access, both on the unserved side or even underserved side, especially areas like MSME, or even for that matter, new to credit population, which is joining. I'm like, India is a fairly young nation, and the next generation wants to start credit journey much earlier in their life because they are much more sure about the future and they are super aspirational. So all this put together, given that the level of payment data is being generated here, how do you see these use cases are being used right now?
I think Anurag, if you recount, and most of us were sitting here, it is also sometimes important to go down the memory lane and see what all has really happened where, the merchants that you spoke of, how did they all get conversant with using technology? Just the way, in individuals we often speak of how our, the generation who's the early generation, how they have become comfortable to technology. Similarly for merchants, if you all recount, then I think there are three events, very important events, which took place. Of course, starting with Demon, then of course GST, coming in very quickly in the country, and then of course the unfortunate, pandemic which came into the country. All these three, have had very remarkable impacts on the way merchants have adopted to technology. And put some numbers in perspective. For example, one would have never believed that 27% of the MSMEs that we have today use accounting softwares, or even more advanced, 14% of them use CRM, and more specifically when you come to payments, 47% of them they use UPI for payment collection. So these were three important events. Of course, when you look at government, it has played a great role, and with, let's say, ECGLS earlier, which is the emergency credit guarantee scheme, or the entire DPI, more specifically the open networks that they are currently bringing in ONDC, OKN, etc., etc. And I think how the fintechs have also helped this adoption of technology, where the entire landscape was opened. We all know the story of how UPI kind of unfolded. And backed with this, the huge revolution which the last telecom players provided to the country, and that also brought it all together. I'm mentioning all this because when you get to the context of how payments has to be used for credit, I think the railroads have been laid in the country by some of these events. Coming more specifically to payments, how does it lead to credit? And having done lending for almost 25 years in my career, I think, and to put some numbers in perspective, in my assessment, I think broadly between 10 to 15% of the small merchants today have access to credit. And my numbers would be broadly correct, I think. And if that has to expand, and the informal channel and the micro merchants that all of us speak, the 6 crore plus micro merchants that in India which are there, I think payments has or provides for 3 or 4 very important parameters which help us in lending. First, I think versus the classical way in which all of us appraise loans, which is the fixed obligation income ratios that all of us are so used to, I think it changes the way in which we look at things. It is all revenue linked. It is all cash flow based, lending, which can be provided. And you put in some parameters like recency, frequency, quantum, ticket sizes, also getting it from multiple places, lat long, of the merchant, the vintage of the merchant, all this information, becomes extremely, crucial when one is, doing the assessment. I think the cash flow based analysis also has brought in, Anurag, different products with the way, we were lending. So typically earlier it was all term loan, but today, we see so many variants of, products that have come in. The, daily payment, method, or it is, got to do with the working capital financing, the tier 3 financing that, all of us, speak of. So in my assessment, for the lender, I think what it is bringing in is, see, all of us were used to period end financials being, sent to us when we were appraising. I also remember when we were, ramping up our business, it is all period end numbers that you get, quarter end numbers that you get. But this really gives you real time, right? And it also gives you the comfort that, basis the cash flows, the lending which has been given will get netted off. So that is also a big benefit that you get when you are actually into flow-based lending. I would say good work has happened. We often talk about credit scoring models, evolving, and I think these are the features that are today coming in, to all of us, where credit scoring models are being created. Fintechs are leading this. Also, NBFCs, large NBFCs, like Aditya Birla, also is leveraging the credit scoring, models and creating those. And I think, in my assessment, this is certainly going to help in the credit gap that we speak about, for the merchants, of course. And the important thing is also for the merchants as well. I think when you borrow, you also become more responsible. So I think that is the other leg which will also come in. So with more and more merchants borrowing and with sachetization happening and with the scorecards emerging, I think more and more merchants will come into the fold and also become more responsible. That is my take on what you asked.
Awesome. Very comprehensive answer. But sometimes you made me believe that we have actually become quite old because the times you were talking about, it's very difficult for people to visualize that just 20 years back, we would send people to NSDL offices to actually verify PANs. We'll send people to meet HR people to verify payslips. And we will rely on CS certificates to do invoice discounting when we're doing supply chain. Today, all of this is connected to payments, and of course, payment data, of course, gives us a lot of data on flows which we can underwrite. And in fact, especially the point you mentioned about year-end financials. Typically, year-end financials will come in September in an economy which is growing so fast. And if you have to do working capital funding after 3 months, you're already behind by 6 to 9 months. So you're not able to serve the customer need.
When you give working capital finance, all of us will know, as bankers, it is all about forward-based, what is going to happen in the future. So when you're doing it in September, anyway 6 months is gone. So what is happening today becomes relevant for you to do the small ticket working.
And especially it is more relevant for the small value credit when I talk about, let's say, because even if you assess a customer for 1 lakh or 5 lakhs, the assessment is pretty much the same. And you don't want to spend your credit manager bandwidth to look at the current account statement, but using tech you can do it. It doesn't matter. It's much faster. Anyway, just a trivia. Historically, the credit scoring industry started pretty much same time with the credit card industry. It started because they generated a lot of data. They kind of helped the use case for credit scoring, which helped the use case for driving of credit cards. Talking about credit cards and in general payments, like India is becoming more affluent. Almost every category, people are now trying to create segments. Be it textile, entertainment, everywhere, every category is doing. How do you see this concept of premiumization coming in payments? Do you see players, because while payment data can be used for credit, payment data can also be used to drive engagement, and which in turn drives more finance penetration. Do you see people using this data to cater to these things like personalization, how to cater to a premium segment of users differently than the mass segment of users? Do you see those use cases coming up?
Thanks, Anurag. Yeah, so starting off, I represent Diners Club here, and the entire payments industry kind of started when a gentleman forgot his wallet when he went for dinner, just about 75 years back. So just shamelessly plugging, we are celebrating 75 years of Diners Club next February in the same place where that incident happened in New York. Coming back, I think India is a very interesting market in that sense. We've now been here for many years, but I kind of took over Diners Club in sometime in 2011, started our journey with HDFC Bank. Couple of learnings from there on premiumization. HDFC Bank is a huge brand. It's omnipresent in India. Few years back, couple of years back, we realized.
We have our next speaker. Let's give a warm welcome to Mr. Santosh Dujari, MD and Head, India Subcontinent, Treasury and Trade Solutions, Citibank. Ma'am, very warm welcome to you.
Yeah, so what we realized is that, a brand overlap is happening more from HDFC to Diners Club and not Diners Club to HDFC Bank. So it was an interesting shift. What we did to kind of load on the premiumization is to take a tagline in partnership with HDFC saying, Diners Club brought to you in India by HDFC Bank. The reason I'm mentioning is that there's no shortcut to premiumization. Today, you just do a little bit of color change, a little bit of add couple of features. That premiumization is all about consistency. And one learning we've taken is that experiences drive premiumization. It is not product feature, it's the experience customer feels. So the most omnipresent program we have is lounges in credit cards. Everyone uses lounges. We saw the queues outside lounges. But traditionally, and this is not now, many decades, Diners Club traditionally has stood for lounges. It's a value proposition we'd have probably for now 3 decades or more, and we've not changed it. That card, you don't need an additional priority pass or things like that. So, consistency is the key. Also, then moving on to how do you target new segments. And Anurag mentioned, Pankaj mentioned SMEs. Now, it will be surprising, India is a land of SMEs. There are very few super premium products catering to SMEs on cards. We launched actually the first metal card on SMEs, which is called the Biz Black. And it was targeted specifically in upscale SME with programs, with rewards, and the startup ecosystem. Because we realized our Black program was more used by startup CEOs than anybody else because they did a back-end calculation how much benefit they derive out of it. So, in one line, consistency, building of experiences, and then keeping at it, not taking any shortcut would be the route to premiumization in India and elsewhere as well.
Awesome. Just doubling down, any use cases where you're seeing people are using payment data to use personalization, especially anyone can pick it up because we are talking about payment is consumers evolve. For example, we always give this use case. Let's say you took a mortgage out. It's a 20-year-old product. You're going to pay up over the next 20 years. And as long as you're paying up your mortgage, nobody bothers you, nobody calls you. But depending on your income, your expenses will change. So your payment provider would get to know what's happening in your life more. So and naturally the data about that can be used for personalization and upgrading your life. Suddenly you probably are living with your friends, now you're living separately, now you got married, you got kids, all your profile changes. You're in a small city, you move to another city. Most of us, even let's say we're living in Bombay, took a mortgage out here and we moved to Pune, which is my case. Mortgage account is still there and I don't think they know that I'm in Pune. But of course, everybody who my card guys know that I'm in Pune. And when I was working for a bank, I will never pay for a hotel because it was paid. When I was alone, of course, I was staying at Tripos and I was using my card. So everybody knows that my lifestyle has changed. Do you see those use cases people are specifically using for personalizing?
I think it will be, Anurag, because when we do segmentation of customers, and all of us have done classical segmentation, but actually payments also brings a dimension of segmentation. As to where are you using your, UPI handle, where are you paying? POS of course has been traditional, but where are you paying? Is it a CNP transaction? What is the type of transaction? What is the quantum of transaction that you are doing? From which phone are you doing the transaction? I think all that certainly brings up when we do segmentation, and then of course at the edge, are we able to then offer solutions, depending upon the segment of the customer. is something that we are attempting, in the ABCD app that, we have kind of launched. So it is definitely a very important feature when you are doing, it adds to the features that, you do when you are doing a segmentation, is what I feel.
I'll come to Super App by the way, because I want to double click on that. But bringing you Santosh inside, like, how do you say, especially given that you have a much larger view on how commerce is growing, both domestically as well as Indian merchants going, connecting, catering to global clientele, or vice versa. How do you see those use cases coming up purely from a commerce point of view? Because ultimately, commerce is the core on which payments ride on. So that's why. How do you see that emerging? Because that's a very new set of business model.
The Indian e-commerce sector is actually expected to grow at a CAGR of 27% and reach almost 163 billion by 2026. Now, cross-border e-commerce plays a very important role here. In fact, India's cross-border e-commerce market is 20% of the global e-commerce market. India is also a very large recipient of retail remittances, the world over, at around 124 billion. The inward remittances today are almost 14% of the global remittances. And at 27 billion, even outward remittances are growing at a CAGR of 25%. So, we have favorable demographics. We have a very meaningful MSME sector. So all of this makes India a very attractive destination, not only for receiving, but also for, sending out monies, which is what e-commerce is going to leverage. And that's what we're going to see in the coming years. I'll talk a little bit more about what's happening today in the e-commerce space. Traditionally, payments in India, especially the cross-border payments, have been dominated by SWIFT, if you look at the B2B segment. And if you look at the B2C and P2P, they have been dominated by money service bureaus or credit cards. However, this is changing very swiftly because of the emergence of local digital payment rails that we are seeing across countries. And this is swiftly changing the payment ecosystem the world over. If you look at India alone, in India, besides the 100 million credit cards that you have, you also need to tap the 1 billion plus debit cards and UPI users to actually, try and push and drive commerce. That's all very, very important. So these are some of the points, which are going to play out for the new use cases in e-commerce. Actually, it's a combination of enabling regulations as well as the changing payments landscape, which is giving rise to a lot of new use cases in e-commerce. And if I were to talk about some of them, you have the travel aggregator space, you have the digital goods space, which is dominated by big techs, you have your SaaS flows, you also have the emerging medical tourism and education flows. And, we have the erstwhile OPGSP guidelines and the newly enabled PACP guidelines, which are actually driving e-commerce in the country today. So, as we see all of this build up, we're saying that basically e-commerce, is going to be enabled by what's happening in the payment space across the world.
Awesome. So cross-border is a very exciting place because it has tons of regulations and very, very complex integrations. In fact, historically, cross-border payments have driven on few platforms, like you said, card networks and SWIFT of the world, and most of the local plumbing was using domestic payments. But given that India has leapfrogged in domestic payments so much, the consumers are expecting the same experience in cross-border also. And we are also seeing, very interestingly, these regional alignment happening where India has signed agreements with multiple countries around with its trade partner, and the idea is that Can it see a regional alliance emerging on the cross-border? We also saw a regulator announcing a cross-border PA license, which is very different, specifically targeted towards that.
No, I agree, and that's the PACP that I was talking about, payment aggregator across borders. In fact, if just to add what you were saying, if you look at payment intermediaries and marketplaces across the world, they are actually providing the right platform for our MSMEs to expand into countries outside of India. And on the reverse side, actually, they offer a very holistic payment experience if a brand from outside wants to come into India. And because brands from outside will want to come into India because of the favorable demographics that we spoke about earlier. So if you look at the cross-border space, actually there are three key friction areas which impact any payment experience. You have cost, you have speed, and you have visibility. And you have countries and organizations across the world who are working on these three parameters. And this work that will happen across these three parameters is actually going to drive how we access new segments and new countries across the world. Just taking the example of Citi itself, at Citi, we are doing a lot of work around these three parameters. So be it instant cross-border payments across country corridors, or be it 24/7 global clearing, or be it payment into alternate payment methods such as cards and wallets, and also API-enabled, new-gen, cloud-enabled payment solution platforms. There is work going around all of these areas across organizations, across banks, and this is going to drive the expansion of commerce across the world.
Can I add another? So, I think in addition to what Santosh mentioned, I think very importantly, real time what we feel is a par for a course. I think real time is what people look at, and in the industry of cross border, about a very large proportion in India happens in the B2B side of the story. Individual remittance is a smaller portion, FDI is smaller. The largest is the B2B, and there in that space, when you meet these customers, again the smaller merchants, the people who do B2B business, I think anxiety is the biggest emotion that is there. They want to kill anxiety. So anything which kills anxiety in the process, they love to transact. So how do you reduce anxiety with real time? And the trust deficit, which networks will have to work very significantly on trust deficit. And what we have seen in UPI, for example, the democratization, the cost being zero, technically it is not a great thing, but cost being zero on acquiring and MDRs. I think that also has a role to play in democratizing that international and cross-border payments in a very large way.
No, absolutely. And especially, as you rightly said, one is flow of funds, which people want real time. They also want flow of information real time. Because otherwise, if the reconciliation doesn't happen, and we have, of course, we have all survived on core bank arrangements for forever, and we have new use cases coming through CBDCs, wherein you can program the use case and you can track. But let me step back and say, and it's real-time payment is one area where, especially the global player like card networks are heavily investing, and this is also because the cross-border is the biggest source of reason of existence, usage, and revenue model for most of the card networks. How do you see? What are you guys, seeing that both, and especially in B2C because that's more, but even B2B because Visa, Mastercard, Amex, Discover, everyone is investing in real-time payment still. How can they take a larger? Subhrajit, you want to pick it up?
Sure. I think there are a few secular trends happening across the world. Santosh alluded to it. There is one rise of domestic networks. I mean, if you just go back 10 years, you can count in hand number of domestic networks existed. I don't think there's any country, major country, which doesn't have a domestic network. What it does is it creates domestic infrastructure to compete with larger international networks, which creates the potential to bilaterals and multilaterals. We've seen mass tying up with Thailand, PromptPay, mass tying up with Malaysia's real-time payment systems. That is one secular trend, which basically then helps reducing cost and cross-border, things like that. The other is that customer experience is moving, as Pankaj alluded to, is real-time payments. If you have real-time payments in domestic and you have to wait 2 days to find out your payments reached your recipient outside, it's kind of jarring. So I think there's a lot of fintech we're seeing working in the space. Aleta is one name, not very sure I know how many are familiar with, but they're doing a phenomenal job of moving funds into China. China is a very complicated market to move funds into. So I think it's all about the ecosystem coming together, but end of the day, what it will drive, and from a network perspective is, cost will definitely go down. Today, the cost of cross-border payments is significantly high. That is going to go down. On the other axis, I think the speed is going to increase. Now, whether that happens through competition of UPI, tying up with multiple countries and then forcing others to reduce the cost or things like that, or equivalent of that, but those trends are there, and I think cross-border space in next 5 years would have its own UPI moment. I think it's going through its own UPI moment. In next 5 years, it will look a very different space compared to what it is today.
Awesome. Moving to the domestic side, I think, another use case for payment is, see, payment usually is a fairly trustworthy application because you're moving money. Also, especially we have seen markets like China or India, most payment apps have generated very large number of customer adoption. Also, we spoke about data which comes associated with that, which can be used to personalize. We spoke about to create, very specific features. We have seen in other categories, like when you talk about commerce, many countries they have single app controlling large market share. In India, we don't see that. We don't see that use case in mobility as well. We have an Ola and Uber, now Rapido coming up. So do you see that a payment, because we have now 200 million people using UPI every day. Do you see there is a use case for a payment super app? And I'm going to go to Pankaj, putting on spot because you guys launched ABCD. And if I'm not wrong, you want to basically create at least a financial super app where you want to cater to everything from payments to mutual funds to everything. Do you see there is what was the thought process when you guys built that? And what do you want to achieve?
So Anurag, I think when you look at the customer insight, and if you look at what was it 3 years back and what is it today. So 3 years back, if you want to summarize this was FPN, free, perfect, now. These are the 3 things that customers wanted. I think some changes have happened there. Now it is, I think, PCP and one T is also got added, and I'll just come to that abbreviation. So where, the FPN, the PNN stays, perfect and now people want it even today. But P, C and T, P is for personalization, C is for convenience, and they want to deal with a trustworthy service partner. So in our insight team that we did for ABCD, I think we have done more than 600 such qualitative, rounds of, question answers where we tried to find out how people are consuming financial services. And these are the 5 insights which play on my mind. That's why that, abbreviation that, I spoke of. I think if that has to be the, base, then I think it is important that platforms that are, and I'm calling them platforms which are more verticalized, I think in my assessment versus a platform which has the width, which serves the customers, let's say asset protection, investment, transaction and asset creation need in the FS space, I think there is a higher probability of success is what I will say. And when I say this, because the verdict is really not out whether it's physical or digital. People are looking at Jodikta or Vikta, so people want, your platform to also be visible. So I think the call, at least at our end, was taken that we need to create an omni-channel platform where people can see us also and experience us also, digitally. When you do this, and when you have a width of offering, the surface area of conversation is also increasing with the customer clearly. It has its own challenges, of course, and when you talk about personalization specifically, you spoke about it earlier as well. When you have a plethora of information coming about the customer, your ability to personalize definitely increases versus being a verticalized way of looking at the customer. So I think for applications like us, which are non-banks, I think it was very important for us, to get the transaction layer also into the platform. Otherwise, most of the other products that we had were, typically monthly, quarterly, annual engagement opportunity. So I think payment gives that opportunity, where transactions gives it a daily, hourly, kind of an opportunity to engage, with the customers. So that was the genesis of also, having transactions within our platform. On the other side, of course, when you do this width versus depth, I think you have to be best at that category as well. So that's the challenge which comes in. There's also multiple regulators that you have to deal with when you're dealing with so many categories. So that's another challenge that you have to keep looking at. And of course, the regulations which also come with multiple categories. So in my assessment, in my own understanding, probability of success will be higher with the width of offering, but you have to be best at every category, and you have to stand for everything finance, as simple as ABCD is the tagline. So you have to stand for it. Then that's the way in which we are looking at it.
Awesome. Thank you.
Just one thing I want to add to super apps, and Pankaj spoke about how a payment or a finance app is going to widen to become a super app. But one other trend that we're seeing across all of our corporates is that large conglomerates are actually looking at super apps to offer one face to the customer for all of their consumer facing verticals. So you have large conglomerates such as Reliance, Adani, then you have Tatas. They're merging their consumer facing businesses so that they can have one brand and they can offer a unified solution to their customers. This is also a statement that all of these businesses are now becoming more and more digital. So that's the other trend that we're seeing in super apps.
Awesome. I want to pick up another very important aspect of payment security, but given the time, and I know I have got an opportunity to present such a comprehensive panel from wholesale to retail to networks to brands, assets, finance. So I'm going to open up for questions if there are any, and then we'll come back to them. Yeah, there are some hands here. Can we get a mic here? Also, if you want to direct your question to someone specific, that's fine. Otherwise, anyone can answer. Yeah.
Yeah, my question is regarding, so sir spoke about personalization and emotions. तो हम लोग इसी चीज़ में काम करते हैं, so we are mapping the emotions with the AI. So मेरा question है कि I know Anurag is a very good card, but Anurag, I can bet on that you cannot sell me the card unless you trigger my emotional buttons, right? And I'll give one example of the lounge. So every time I go to PVR, somebody comes to me and then says, sir, ये card है, इस पे आपको ना movie ticket पे discount मिलता है. And every time I ask him कि sir, lounge वाला कोई card है क्या? And I never get the answer. And when I go to the bank, they'll tell me कि mutual fund लेना है. So it is somehow with the aura, with the place I'm in, the PVR, you can have all the data about my credit card and PVR, about my UPI, but you can't tell when I'm emotionally charged up to purchase something, which is personalization that we build in with the AI. And so my question is, now this needs a very elaborate strategy about go-to-market, about data and so on. So how is the panel taking this personalization, capturing of data, emotional mapping of the customer with regards to personalization?
See, I'll probably start. See, it's a journey. I think because Indian consumer is a fast evolving one, and absolutely right. Finally, the sale happened or a brand engagement happened when you're able to connect to consumer on an emotional basis. And we're all working hard to get there. But I would just say, I'm like, all of this is work in motion. It's very difficult to say some we have achieved. Completely agree with you. And I think that's a path to go. But, anyone else want? Yeah, Anurag, you want?
It's all about predictive modeling, right? So at the end of the day, what are you trying to do here? You're trying to look at your spend patterns, you're trying to look at your behavioral patterns and predicting what you will do next, right? And that's where the experiences part comes in. So let's say you go to a travel portal and you booked a ticket. The next thing the card company would know is, okay, you will book a hotel. From the hotel, you will probably go and do some sightseeing. So it's all about figuring out what is it that you're going to do as next step and then trying to catch you in one of the aspects of that journey. So I think as especially I can talk about American Express, as we are a closed loop, we have a lot of information right from the card to the merchant to the network. So we have every aspect of it covered. So we can try to figure out what is it that will influence your decision, so to say, and get you to get the product that we want you to have.
Just adding to that, so Discover is pretty much cashback in US, right? And they run quarterly cashback bonuses in different categories. It's what Anurag was alluding to. We plethora of data. Each quarter or each seasonality triggers a certain emotion. And then there are overlapping segments of spends, right? When you map them, you can target your customer better for accruing those spends.
Again, just to add, still it's journey in motion. And second thing is, being a risk-led product, a lot of heavy lifting first happens on the risk side, then moves to the consumer side. But yeah, you're absolutely right. That's where we need to get there.
Just one other aspect on this is that, as you talk about personalization, this because there's been such a shift, and I'm talking, not so much an individual, but more a corporate. We've seen a huge disruption in business models where more and more of our customers are going directly to their customers. So this has given rise to a lot of miniaturization and a lot of data-led, lending decisions. So because there's a huge disruption in digital payments across the world, this has led to all of this. This combined has led to the rise of what we call subscription economy or pay-per-use models. And one way to wow your customer is to use the data to see how you can offer them options such as buy now, pay later. You're buying all the time, and you have a personalized offering, but suddenly, if somebody is offering you credit to be able to purchase your product, that changes the way you look at things, and that changes your perspective as to how much more you can buy. So this is another trend, and I couldn't talk a little bit because I was late about data. I was supposed to talk a lot about data, so just wanted to bring in this angle, because traditionally credit models have been based on credit history. But with this change that we're seeing, a lot of inclusive credit modeling models are coming up, wherein behavior data can actually be used for credit assessment, which means then you're not dependent on your past borrowings, but your behavior is going to decide how much of money will be lent to you, which can change your pattern and your lifestyle to a very large extent. So just wanted to bring in this, aspect.
Just to acknowledge, the same data is being used for risk. I think probably what you meant was more on the consumer engagement side, work in motion. Yeah, we had another question, and probably that is the last one. Yeah.
I just wanted to ask about how is the plastic cards or plastic money going to be declining in the coming future? Because the last time I've used plastic card, I don't remember, only the Aadhaar card and PAN card to get the credit line on my UPI app or any other payment lending app. So, and I love your OneCard, it makes my wallet heavy. But yeah, how is it going to decline, or do we see an end to the plastic money?
I think it'll end for sure, but we've been answering this question for almost 7-8 years now. Like we used to, when I was in the bank, by the way, that time we used to predict when will plastic die. Pankaj is smiling, we used to debate that. But I'll let the network speak, because you guys are representing much larger area.
Yeah, plastic is just a form factor. It'll continue as long as, different economies at different stages of, even as advanced economies like Japan, US, plastic is ever prevalent. So I think, I don't know who said it, but there's a quote, right? My demise is something like that, right? So it's not going to go anytime soon.
And India, I'll just probably add to it, India is very layered. For example, like the checks are not growing, but they're not dying. Because the person who was probably not doing check, they just first went to check. Of course, the younger generation will leapfrog. As I think all of us would believe plastic is just a form factor. Ultimately what matters is the line and how people use it, how we can drive engagement.
Yeah,
I'm really, sorry Santosh. Yeah, we're really off. I'm already getting the signal. So thank you everyone. Thanks to all my panel. And thank you for listening to us.